you're watching Buy Now, Sell Now with me, Kanishka Sarkar and Sharad Dubey, a show where we answer all your stock-specific queries with our experts. So don't forget to share all your queries to us. Remember to write your name, your stock, the buying price of your stock, the holding period and the time horizon that you wish to hold the stock for, and our experts will answer all your queries there. But Sharad, another quiet day coming in on the market, today, but we're still managing above that 25,000 level today.
Well, yes, Kanishka, there is a recovery. Of course, there was a gap down opening coming in for both the indices, Nifty and Nifty Bank, but the recovery has been smooth. And of course, earning specific reactions are actually bowing the markets, as we had discussed earlier. ICICI Bank, we are also having HDFC Bank, both of them with the top gainers in the Nifty Bank index. And of course, their weightage is also on the higher side. Roughly, to be precise, 55 to 60 odd percent of the contribution is coming in the Nifty Bank. And that's why we can see the Nifty Bank also is up. But on the other hand, Reliance is still dragging, and there is no much scope of recovery coming from Reliance. That is still down almost 2 odd percent, and it has not recovered yet. Of course, the numbers coming in on the mixed side, and certain numbers also coming in below estimates as well. Apart from this, interestingly, Kanishka, the broader indices have performed well. The mid cap, small cap indices, they have also shown a strong recovery coming in, and of course, that's actually auguring well for the market. India VIX levels is also, you could say, certainly on the lower levels. That means the broader indices participation is still happening, and of course, the large caps, if you look at it, that's where the numbers impact is also coming in.
That's right. So that's how the market is shaping up right now. But to discuss this further, decode the market trends and get our stock-specific queries answered, now let's welcome on board Tapan Doshi, who's an analyst and chartered accountant, and also Kunal Shah, who's a senior technical and derivative analyst at Mirae Asset Sharekhan. Thank you so much, gentlemen, for joining us this morning. Now, Kunal, coming to you first before we get started with all the queries. I want to understand, what are you making of the markets at this point? We're above that 25,000 level. Do you think we are going to sustain this level, or is this a one-off?
Good morning to all the viewers. Yeah, definitely. What we have seen in the Nifty index today has been a smart recovery, all thanks to the banks. What we have got. Overall, the trend for the Nifty has been on the downside, where we are forming a lower top, lower bottom formations on the technical charts. So the higher end for Nifty is 25,300, which is where the 20 DMA for the Nifty index is placed. And today's low will be critical for the market. If we break today's low, then we might see the correction getting deeper toward 24,500 on the downside. So we are looking at a range right now. Today's low, that is 24,900, and on the upside 25,300. This could be a broader range for the markets. Breakout or breakdown on either side will have trending moves into the indices. So for today's trading session, I think buy on dip approach. Dip should be utilized as a buying opportunity. You can expect the market to go towards 25,200 levels on the higher end. Now, for the bank Nifty indices, here the two big boys, HDFC and ICICI banks, have seen strong buying interest from the lower levels. Bank Nifty has been able to hold the support of 56,000. Again, on the derivative data, this has been the strike price where the highest open interest is built up. And on the higher end, the resistance is at 57,000, which is where the 20 DMA is placed, as well as the call writers are active on those levels. But overall, once that 20 DMA is taken out, you can expect Bank Nifty to go to all-time high levels. So 58,000 is what you can eye on the Bank Nifty on the higher end. Bank Nifty remains as a buy on dip opportunity. 56,000 should be a stop loss on the downside. If that is taken out, then the correction gets deeper. Overall, we expect targets of 58,400 to 58,500 on the higher end for the Bank Nifty indices. So bullish on Bank Nifty. Nifty still needs some confirmation to change the trend. That will be a breakout above 25,300 on the higher end.
Well, important update for Nifty Bank is the bullish view and a buy on dip strategy when it comes to Nifty, when it gives the clear signal as well. But now let's go ahead with the show, and we'll start getting the queries from our guests. And the first one, of course, is from Radhika. She has mentioned that she has LIC Housing Finance, 100 shares are there, and the average buying price, that's roughly at 609 odd rupees. And if you look at it in current level prices, that's just a minor bump up when it comes to their overall earnings. In the last 6 months itself, around 12% jump has come in LIC Housing Finance. Tapan, my first question would be, of course, for LIC Housing Finance, it's better to keep this stock going ahead, because we are seeing a lot of housing finance companies actually jumping in the rallies as well, and fundamentally how this entire space is actually shaping up, especially LIC Housing Finance. Tapan.
Yes, sir. No, if you see NBFC sector is over in a sweet spot, no, because once the interest rate cut happens, normally NBFC gets a lot of lower level funding, okay, lower interest rate funding, and that will help them to increase the NIM. Again, LIC Housing Finance, the big thing is no, it's in a housing department, or they have a housing department, correct, and where they land it. Now, there always a collateral is much more solid, and that's why you have a lesser NPA. And again, if you see LIC Housing Finance, also they are the if you see the guidance and all that, they are talking about mid to 15 around double digit growth, which is quite good. Net interest margin is stabilized around 3% for next 2 years around. And overall, if you see their disbursement, no, actually almost 64,000 crore is already disbursement, which is good, quite good. So NBFC, if you see in last few months has gone up, and I think this will go up also from here also, because at the end of the day, the interest rate cut which may happen, see, actually it was been told then no 50 basis point cut will happen this year, but it may happen more because the last inflation data was around 2.1%. And if interest rate cut happens, I think all these housing finance company will be benefited. Again, asset quality now they are getting stabilized, and revenue also will go up from here. So I think LIC housing, if they hold at this level, I think they should hold it for a medium term to long term, not a problem.
Okay, so that's the view on LIC Housing Finance. But moving on, we have another query coming from Rakesh, our viewer. He's been holding Ola Electric shares at a loss of 8,000 rupees. Should he consider reinvesting into some other stock? What would your alternative suggestions be, Kunal?
I think definitely. I think there are much better alternative solutions which are there. So I think Ola Electric is one stock where any bounce you get into the stock would be an exit opportunity. So I think exit that stock, and we are very bullish on this two space. That is, one is the AMC space, and second is the metal index. So I think these will do well in the very short term. So I think for the AMC space, we are bullish on NAM India. That is looking very strong on technical charts. More upside is left. I think one of the cheapest stock, even on the fundamental perspective from the AMC space. So I think still upside left over here. So NAM India could be one stock where he can shift his investment to. Currently trading somewhere around 855. 850 zone, so one can start buying at the current levels. 800 should be a stop loss on the downside. I'm expecting 950 to 970 to be achieved in the very short term. So I think NAM India is one stock which you could keep on your radar. And also on the metal space where we are looking bullish, I think Hindalco is one stock that is looking strong on the technical charts as well. And you can start accumulating it right now. The real momentum will start about 710, 720. So I think an early buying opportunity is what one is getting. The risk to reward ratio is favorable, currently trading at 685. He can keep a stop loss of 660 on the downside. And positionally, if he holds the stock for the next, I think, 2 to 3 months, he can at least expect targets of 760 to 800 on the upside.
Interesting development coming in the metal space, and of course two important developments coming today morning itself is that China has actually kept its lending rates unchanged and also coming out with new schemes for their lot of new schemes. And of course there is a second order effect when it comes to the metal space as well, and today we are seeing metals actually carrying the brunt as well, and we could see that they're one of the top sectoral gainer indices as well. Now moving on, we are having Partho from Kolkata, and he says he has around 190 shares of Amara Raja batteries. Now the purchase price is coming in at 1127 odd rupees. So first one is, should he buy or should he average at the current market price? The Amara Raja batteries is roughly coming in at 990. So roughly you could say 10-15% downtake coming in, and not much happening in the stock as well. It's under consolidation. Tapan, I'd like your views. Should there be an averaging movement when it comes to Amara Raja? Not much triggers have come in over the last 2 to 3 odd months, but currently the stock is not down also so much from the purchase price of Partho. Could you just explain medium term basis how does Amara Raja batteries pan out?
See, I do agree with that Amara battery has not moved. As such, the prospects look good, no, because whatever collaboration they have with Hyundai and Kia. Again, if you see, no, their battery growth demand will be there at least around 15% for next 2 years. The way EV is going on, and no, they are now getting into EV in a big way. Of course, they have started a new energy segment, no, which is giving a very good growth. Of course, the EPS also has gone up. And overall, if you see, the main problem is with Amara was that traditionally what they were doing business and the conversion to EV. Now, but both Amara and Exide, I can see both are converting well. But yes, it is taking time, and investor will notice in a few, I think 1 or 2 quarter it will take. But I think capacity addition, what they are trying, their management is saying it's good. Even margin expansion, they have already guided that they are going to work on their margin cost efficiency. I think overall, if you see, the stock is not moved, so I cannot say it's at a overvalued level. At this level, I think it's a hold. And my take is then I think in 1 or 2 quarters, I think this short stock should move. So if they want to average, yes, they can average, but at least one time they should average. But I think few quarters down the line, I think this stock should move because it has not moved at all, and the prospects look okay for me.
Okay. All right. Okay, thanks, Kunal. So a whole call coming for Amara Raja batteries. But on that note, we'll take a very short break on this edition of Buy Now, Sell Now. We'll be right back with more queries to be answered on the other side.
Focus shifts to the earnings season, and a lot of banking earnings are also in focus, especially Bandhan Bank. Now, joining us to dissect the overall earnings, how it has been, is there a MI pressure going on in the stock, why the asset quality has deteriorated, all these details would be coming in as Partho Pratim Sengupta, the MD and CEO of Bandhan Bank, joins us. The first question is, Partho, how's the performance for the MFI segment actually looking like? This has been under duress. And what do you think this segment will see a rebound? Will it be in this quarter, in a couple of next quarters? And how much impact has come from the guardrails as well?
Yes, so let us go a little bit past for that year. So last year Q1 was an exceptionally good quarter for the bank because all due to microfinance segment. There was a huge growth in this segment and a lot of disbursements took place. But as we all know that from Q2 onwards, that is from September quarter onwards, this segment has witnessed a lot of challenges and for which we have to take a conscious call of actually containing the growth of this EEB segment or the microfinance segment. Last year also we have degrown by almost 6,000 crores. And we have anticipated that yes, okay, from March onwards also the Q1 and Q2 of the current financial year will continue to be a challenge in microfinance sector, and but we will be doing relatively better than the industry. So if you look at our books for the year, we have Y2Y we have degrown by 14.7% and also Q to Q we have degrown by 6.6% in this quarter for the year. So the growth of course, now what we have declined in the growth, that will obviously be arrested. So in Q2, we are expecting that we will be maintaining a stable book in this segment. Q3 and Q4, we are expecting a marginal increase. So our overall target to grow 8% over and above the March 25, whatever we have shown in March 25. So that I think we'll be able to achieve.
All right. Hi, Mr. Sengupta. This is Kanishka also joining in. I wanted to understand from you, now for the first quarter, disbursements were also quite muted. Are you expecting any kind of improvement going forward, like Q2 onwards? How is the overall credit growth in the system at this point?
So, as you have seen that although there is a lot of liquidity in the banking system, the credit offtake is surely, I would say, a little bit muted. And it is not that anything major thing that has happened. So it continues, the credit offtake almost remains at the same level for the day. So, but I think going forward now the inflation rates has also moderated and I think the rate cuts, the effect also the borrowers are getting from almost 75 basis points from this quarter for the day. So all this will definitely, and the festival season is also coming, so all this will definitely lead to a credit growth. That is what is our expectation for the day. And but microfinance, yes, Q1 I told that the challenges will continue in Q2 also. While my disbursements have definitely picked up than what was we have witnessed in I've said December, Jan, or for whatever we have witnessed in April, May or June for that year. From there, the disbursements have picked up, but yes, it is yet to reach a sustainable level for that year. So, but the indications are there because the delinquency level is coming down. So my SMA 2 books, it has declined. SMA 1 has remained stable. So this is a good indication, I can say. So definitely I expect that this sector will improve from Q3 onwards.
Improvement coming in the sector for the third quarter onwards. But Partha sir, another question is that the SMA book, as you had mentioned, has come down, one of these parts, but the NPA, that has gone up. Why and where will these levels be as we move into FY26?
So we have our target to bring the NPA at around 4.5% by the year end for that year. So we are gradually moving towards it. But this month, of course, as I've said, that because the microfin, that whatever the SMA 2s were there in the last quarter, so many of them have slipped. That has resulted in a marginal increase, but more or less we have contained. So recovery efforts are there, and again the delinquency level has come down. So expecting at around 4.5% by the year end.
All right, Mr. Sengupta, let's also talk about rate cuts then. Now, how much of the rate cut has been passed on and how much is yet to be passed on? How is this exactly going to impact your NIMs? You have said that NIM will go down by 50 to 60 bips in the next 2 to 3 years. Now, it is already down 30 bips. So, how much more can we expect going forward?
So, let me tell you that NIM will be moderated because we have already passed 25 basis point rate cut and another 75 basis point we have passed from July. So, but 2-3 positive points are there. First of all is that Bandhan Bank has cut down the deposits rates from April, and which has given me an immediate effect on the cost of funds by 19 basis point during this quarter. And going forward, the fixed deposits will get matured, and as and when this maturity takes place, definitely there will be further reduction in the cost of funds with the new renewals. So that advantage we are having it. This is the first thing. Number two is that my almost 50% of my books are still in the fixed rates, so which are not impacted by the rate cut. So that book will definitely give a stable income. And the third point is that as we are making more concerted efforts in containing the slippages, which is coming down, but it need to come down further, for which what we are working out. And if we can contain those slippages to around 10% from the current level of 5% or 6% for that year, my NIM will further improve. So whatever the moderation will still happen considering all the effects, but I don't think that it will create a much impact on the profitability of the bank.
And Partha, so the credit cost is still elevated, coming in at almost 3.5%. So what will be the roadmap if you want to actually get towards that 1.5 or 1.6% mark over the next 2 to 3 odd years?
Yeah, so the credit cost, we have said that Q1 credit cost last time in Q4, we have said that it will be more or less the same, but thankfully we could achieve a little bit reduction. So 3.9, so we have come to 3.5. I hope that a further improvement will take in the front of Q2. So as of now, after reviewing the entire things, we have not changed our guidance. So we said that the credit cost at the year end would be around 2.5. We are still keeping that guidance. We are still hoping that Q3 and Q4, it will be substantially good if we can bring it down to around 1.7 or 1.8% for that year. Then overall the credit cost may be at the range of 2.5% what we have said. So we have not yet changed the guidance. We still are quite sure that we will be achieving at the year end a credit cost of 2.5%.
So the credit cost guidance, that remains same for now. But Mr. Sengupta, your company had also set a target of 15 to 17% CAGR growth in advances for the next 3 years. So will you stay with that guidance as well? And what about FY26 particularly? And apart from that, what will be the target for deposits?
We have set our, as I have told last time also, that we have set our target for advances and it is 15 to 16%. We are still keeping that guidance. So June quarter is always a relatively low quarter because last year June was an exception. But Yet, if you look at my secular growth on the various segments, you will find that except for EB, or in the micro book where we have degrown by around 14%, we have grown almost everywhere. That is, our housing book has grown by 15%, our retail by 70%, and our wholesale banking has also grown by around 40%. So there has been a good growth everywhere, which I can say in respect of all the other segments, housing, retail and wholesale banking for the day. So this pace will continue, this momentum will continue, and as I have said earlier, we are expecting the microfinance book from Q3 onwards, it will definitely change. So our guidance for 8% growth in this microfinance book will definitely help us to achieve an overall target of 15 to 16% in the advances. And for deposits, we have said that we will outpace the growth of advances. So if I can able to achieve the growth pace in Q1, our deposits have grown much higher. It has grown almost by 16%, and which is more than the industry growth. But we will continue to maintain that pace, and definitely we will try to outpace the growth in advances in case of deposits also.
Well, interesting. The MFI stress might be bottoming out from the third quarter itself. Last time the company said that the bank is currently not taking CGFMU insurance license, but is actively evaluating it for future use. Now, what is the update on the same? Any suggestive timelines for it?
So till now we are just examining, because you see there are certain fine prints in the CGFMU scheme which is actually not beneficial for us. It comes with a cost, and so we are examining it for that year. Right now, of course, I can say that going forward, what we will take in respect of the new disbursements for that year. So only after examination and actually thoroughly examining it, taking into the slippages rate, taking into account the cost of the premium and all other things, we will make a decision on it. So right now, yes, whatever the CGFMU claims we have lodged, we are just following it up so that we can get it at the earliest.
All right, so the lender continues to examine the prospects of CGFMU insurance. And thank you so much, Mr. Sengupta, for sharing your time with us and helping us with the outlook for Bandhan Bank going forward in FY26 and onwards after that. Thank you so much for joining us today. On that note, we'll let you go. All right, with that, oh, wait. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Sharad Dubey, a show where we are answering all your queries, stock-specific queries with our experts. So let's get back to the queries then. Tapan is still with us. Now, Tapan, this query is coming from Bharat Paj from Coimbatore. He wants to know your view on Delhivery. He has 600 shares of Delhivery at an average price of 316 rupees. He wants to know whether he can add more at the current levels. He's looking to hold the stock for another 2 to 5 years.
Okay. See, if you talk about Delhivery, it's one of the, you can say in the logistics segment, I think one of the best stock, if you can say. And of course, lot of hope are there with Delhivery. And if you talk about Delhivery overall, they are talking about margin improvement from next few quarters onwards. Of course, the revenue is flattish, okay, not so great, but the overall prospects look good for the Delhivery. And again, many things they are changing. If you talk about the management is talking about operationally, they are talking about many metrics they are changing. Again, if you see overall depreciation, that was the main cost which was impacting, but they told that in future, of course, it will be on the downward side, so that is also positive. Again, parcel margin, that is going to improve from here. The parcel what they are sending actually. Now in that unit level, there will be an improvement. That is a positive. And if you see Delhivery overall at this level also, if you talk about the valuation perspective, you may feel it is little bit on a higher side. But this is a stock, I think, among the logistic, I think the best place. So my suggestion, if you hold it, hold it, or you can buy at a lower level, but don't have a fresh buy currently. You can buy at a lower level. Otherwise, if you have, hold it.
There is a buy on dip strategy, and if you're already holding Delhivery, Tapan's view is that keep holding the stock. Now, of course, joining us is Manas Jaiswal as well. Good morning, Manas. First of all, there's a query coming in, and this is from Karishma from Delhi, and this is of course coming for long-term positioning. And two stocks are there in focus. The first is Bajaj Housing Finance, and the second is BHEL. Both the stocks, what would be your recommendation and view? And of course, this is for long term. So, how it's looking at the charts? If you could help us with that.
Good morning. In Bajaj Housing Finance, I think one should wait for a breakout because stock has been facing resistance near 200-day moving average for quite some time. And now, if it breaks 135, then definitely you can see the level of around 160, 165. However, if you're holding the stock, I think you can keep the stop loss below 109, and you can hold Bajaj Housing Finance. And can you repeat the second stock also?
Manas, the second question is BHEL, Bharat Heavy
Okay.
Electronics.
Now, in BHEL, you can see a consolidation for last 1.5 month. Stock is moving sideways in the range of 270 and 240. So if you're holding BHEL, you can hold it, keep the stop loss below 200 moving average, which is placed near 235. If it breaks the resistance of 270, then definitely you can see the levels of around 300. So till now, I think you can hold it, but keep the stop loss below 235.
Okay, so that's the view on BHEL. But Manas, another question for you. This is a largely broad-based question. Our viewer PVN Rao from Hyderabad has written to us and wants us to get your, a few small and mid-cap ideas for the long term. So what would your picks be?
I'm not getting the audio.
Manas, can you hear me? Am I audible now?
We are having some technical difficulties with Manas, but Tapan, I would like to actually use these questions for you as well, since you also have used medium term and long term as well. Mid cap, small cap, sector specific or stock specific, either which would be important, especially stock specific, as our viewers want exact stocks. So which stocks are you looking at in a mid cap or small cap space where there is a good earning opportunity, say in the medium term or the long term?
Sector specific, I think banking is a place where to be, but of course specific banks. And I think some of, if you're talking about the mid cap, I think Federal Bank and Karur Vysya Bank, no, you can two banks I will look out, the way they are progressing and the way they are controlling their cost to income ratio, plus all even NPAs and all that, they are much better in control and their guidance is quite good. Okay, the newly appointed CEO is doing wonders for this stock. I think this is the two stock which I will talk about mid cap. Even if you want to go from another sector, I think hotel sector also look quite good. No, there also consumption, discretionary consumption will be on a peak. So I think mid cap, I think Lemon Tree is a good pick if you want to think about it. Because you can say average revenue per room is increasing a lot. Even the last time Indian hotel result, whatever was out, they told double-digit growth is there, which I feel that whole the sector will be in this line. Even in FMCG, you can think about like Varun Beverages if you want, because it's available at a very, very no good valuation. It's been down by 35 to 40%, and still prospects are good. And I think that capacity addition and the way they are going to going into a small ticket, you can say drinks. I think 10 rupees, 20 rupees to give a competition to Campa Cola. I think that will do for them. So I think that is also one of the stock one can look at it.
Okay, so hotel space is also something that you could look at. But Tapan, another question coming for you. This is Rohan from Pune. He has 100 shares of Tech Mahindra at a price of 1,575 rupees. He wants to know how is this stock placed on the technical charts?
Well, I'll not able to talk about technical charts here, but much more on a fundamental I can talk. So fundamental, why to say Tech Mahindra overall the result was okay, not so bad, but no, actually after the result the stock gone down. But if you see the guidance, which is much better this time given by the company, and of course it is much more depending on the telecom sector. Okay, so the problem with this IT stocks is they are losing the flavor actually as such. No, overall the IT sector is not doing well. That is impact is getting on Tech Mahindra also. Tech Mahindra over the years has not performed. Now it is little bit coming up, and deal pipeline is also good. Whatever the management told. The only thing is that EBITDA margin and all that they have increased. Okay, and again the total contract value, if you talk, that is gone up by 51%. But then also the looking at the valuation and all that, My take will be, if you have that Tech Mahindra, so you can hold it, but not a fresh buy. I am little bearish at a upper level. I think if you can move out, you can move out also.
So upper levels, there can be some profit booking as well. But Manas, there's a query coming in from Raju from Bengaluru, and he would like to know that the stock PB Fintech, is it the right time to buy at the current levels, and his investment horizon that is ranging on a long term view between 2 to 3 odd years. So on a long term chart basis, Manas, is PB Fintech attractive to buy now?
I'm not getting the stock name.
The stock name is PB Fintech, Manas.
PB Fintech, okay.
Yeah.
That is Policy Bazaar, right?
Right, Policy Bazaar.
So we have seen some correction in last, I think, 10 or 12 trading sessions. Stock is making lower tops and lower bottoms. It is trading near 100-day moving average. Now stock has some support near 1650, which is its 200-day moving average. So till stock is trading above 1650, you can hold it, keep the stop loss below 1650. However, the trend will turn bullish now only above 1850. If it breaks 1850, you can see the levels of around 2025.
All right, so that's the view on PB Fintech. But that's all the time we have today to get our stock-specific queries answered. On that note, Manas and Tapan, we'll let you go. Thank you so much for joining us today and helping our viewers with your expert views. Well, with that, it's a wrap on this edition of Buy Now, Sell Now. We'll see you tomorrow, same time at 11. But on that note, it's a wrap. It's a goodbye from me and Sharad.